Traders from around the world, what's going on? It's Ricky Cadden back again with another free Friday stock review from Real Life Trading Australia. Hope you guys have been absolutely stupendously superb and have been crushing the markets lately. We are back in earnings season and the market is looking pretty bullish. Brand new all-time highs this week yet again. But let's talk about this, guys. The SPY. Now we did get a very nice little pattern here, almost looked like an evening star reversal pattern. However, we then had this gorgeous one white soldier candle just kind of breaking out, gapping up above the previous day's close and closing above the previous day's open and almost creating a brand new all-time high. I mean, this is just absolutely phenomenal to see. We did get this gorgeous inverted head and shoulders pattern that did play out, and I mean, the markets are just continuing on bullish. So I guess I would stay bullish on the markets, guys. The SPY, in my opinion, we could do with a little bit of a pullback, but there are a lot of dips in the broader markets. A lot of stocks out there that are at massive lows, which we'll talk about in just a second. The E-minis, you can see here, we are kind of just trading sideways within this range. I do have this green box here just waiting for us to have a nice little cute little pullback into this little zone, and then most likely look to buy the dip. This would coincide with the roughly about the 50-day EMA, which is this purple pink line that we have here. But let's take a look at Amazon. Now, Amazon reported earnings after hours this morning. If you have a look at what happened, if you just take a look at the after hours, open up the 5-minute chart, and wow, huge little gap down, huge gap down on Amazon. Massive gap down from around the 34.50 level all the way back down to and you know, roughly trading around the $3,300 level. So roughly about $150 gap down. If you take a look at the daily chart on the longer term moving averages, the 200 simple day moving average is at 33.24. So usually we would bounce off this level, but we're currently gapping down below this. Now we may not open up below this level. We'll have to wait and see how the market transpires pre-market. But if we open up below this level, guys, just know that this is a massive bullish candle, great volume, and it is gapping down. It is a bearish gap and go. So personally, I'd be looking at playing this thing bearish. I would be looking for a little bit more of a retracement. If you look at the 5-minute here, actually we'll go to the 15-minute. What I would expect or look for is I'd look for a trade back up into these resistance zones, you know, probably another failed break higher and then another continuation lower. Now on the daily chart, we could potentially come all the way back down to this massive level of support that we've had and bounced off just quite a few times. This would be a buying location for Amazon if you are looking at buying some shares. But keep your eyes peeled on that one, guys. Massive gap and go. If you're a day trader, we could see a little bit more of a continuation on the downside. Here's TWLO. Now, TWLO did also report earnings. Huge little retest gap. Huge retest gap yesterday. Now, that is a black candle gapping down. We did gap down to support. We traded higher. We did fade. A lot of volume came in. If you take a look at the weekly chart, though, we are just sitting right above the 100 simple moving average. So if you're a longer term investor, I mean, this would be one level that you would look to watch, given that this is the 100-week support, 100-week simple moving average on TWLO. We did come back down and bounce off this level before. But guys, it's a pretty bearish candle. I would just most likely wait for a little bit more of a consolidation before looking at getting in bullish. Wait for this to possibly hold this support at 265 and then, you know, look to take this one long. Here's MasterCard also reporting earnings yesterday or last night. We did get a gap up and we failed. We failed to go higher after this retest gap. We really just kind of retested that gap high and then rolled back down. If you take a look at the 5-minute here, we pretty much just fell off a cliff straight away at open. So at this point, guys, There's a lot of stocks pulling back, coming down to massive support levels on the weekly chart. You can see we're also at the 100 simple on a weekly chart. We do tend to bounce off this level, so just keep in mind I'm not overly bearish on this particular stock. But what you can see on a weekly chart, guys, is this gorgeous double top, break below the neckline, retest of the neckline, and fail to go higher. So it is a bearish pattern. We could potentially go lower, probably to the 200 simple moving average. Just make sure you do try to catch this one on a retest if you are going to take it bearish. Here's the Aussie 200. On the Aussie 200 on the weekly chart, you can see we're already starting to create a lower high. Bearish weekly candle on the daily chart. You can see we really did start to close below the 100 simple moving average again. So at this point, I wouldn't be overly bullish. I'd probably wait for us to come back down to the 200 again and look to take this a little bit lower. Here's CBA also hitting its head against a massive resistance level that we have been holding since June. And I do believe we didn't have any extra increasing volume really as we were going higher. So I do expect us to probably come back down to the 100 simple moving average on CBA. So keep that one in mind. Probably a little bit more of selling to occur on CBA. If you do have shares, probably look to just sell some out of the money covered calls on this one. If you don't know how to do any covered calls, make sure you email me. My email is in the description below. Here is Boral Limited, ticker symbol BLD. Now we did come back up to the 100 simple moving average and get rejected twice. So at this point, I would suggest that this is going to be a very key level to watch. And then BLD will probably trade sideways for probably the next month or so and to squeeze between the 100 and 200 simple moving average. Unless we have some major sell-off, I do expect BLD to trade very, very slowly. Here's JB Hi-Fi. Now, if you guys remember, or if you guys have been watching my reviews, I did mention back in this zone here that this is where you want to be picking up a few shares of JBH. And JB Hi-Fi on the weekly chart was bouncing off the 100 simple moving average at that time. If you're looking at closing your position out, we are at a previous level of resistance, so there is still time to do that if you are looking at taking profits. Great time to take profits, buy low, sell high. It's one way to make money, so I've been told. But anyway, guys, JBH, if you do want to continue to hold this, I'd probably take at least half off here. If it continues, take the other half off at the highs, and then try to get back in on a pullback. Here's crude oil. Now, crude oil throwing in a delectable hammer candle yesterday on crude, back at another previous level of support. If you take a look at the shorter term moving averages, we really just bounced straight off the 20 EMA. So crude, I did mention we'd probably consolidate and or probably have a little bit of a pullback very, very soon. So if you are looking to take this on the downside, I completely agree with you. Here's gold. Now gold, if you take a look at the longer term moving averages, we are just chilling above the 100 and 200 simple moving average. We do currently have this ascending triangle that is being formed right now. You can see that with these two blue lines that we have right here. But gold right now realistically is just trading sideways, guys. I'm not bullish nor bearish. I haven't got any positions on gold on the weekly chart. However, we are above the 100 simple moving average. Eventually we will start to break out on the upside. And last but not least is the Aussie dollar. Now I have been mentioning to stay bullish on the Aussie dollar. We did get this phenomenal double bottom retest of the neckline, and yeah, we're just hitting our head against the 200 simple moving average. But at this point, guys, I mean, you would still want to be long. If we do get a nice close above the 200, we really should have a nice little trade back up to around 78 cents. And then look to find some resistance. Alright guys, I'll be back next week with another free real life stock review just for you. Make sure you guys leave in the comment section below any tickers or companies you would like me to analyze. But until next time guys, love life, live life and trade it. Have a great weekend.